Welcome back, everyone. We have an update from Zoned Properties, Inc. It trades on the OTCQB under the symbol ZDPY and is a specialized real estate development firm for emerging and highly regulated industries, including regulated cannabis. The company is redefining the approach to commercial real estate investment through its integrated growth services. Happy to welcome back CEO Bryan Mclaren. Welcome, Bryan.
Yeah, thanks, Anna. Really appreciate y'all having me back and excited to share an update with the audience.
All right, after you.
Great, thank you. Well, good afternoon, everyone. Hopefully the conference has been treating you great so far. As Anna said in her introduction, my name is Bryan Mclaren. I'm the chairman and CEO of Zoned Properties, and we're a real estate development firm out of Scottsdale, Arizona that's focused on the regulated and legalizing cannabis industry. A lot of big attention around the cannabis industry over the past few weeks, as federal government has been looking to take some action towards the legalization process and rescheduling of cannabis as it's regulated at the federal level. And where we come in as a real estate company is as each of our state markets, and this is something that's quite unique for anyone in the audience that is new to the Zoned Properties story or new to the cannabis industry. We have had about a decade of state-by-state legalization of regulated cannabis. And so as these marketplaces legalize, state markets put their regulatory system into place, they put their licensing system into place. Think like a liquor license or a sports book license, similar industry that has different legalization metrics on a state-by-state basis. And when that system gets put in place, all of the operators that win the licenses, whether to grow cannabis or sell cannabis in a storefront at a retail location, they compete for those licenses, and the license winners then look to put their licenses at real estate that can be operated for regulated cannabis. And so that's exactly what we do here at Zoned Properties. We specialize in that very challenging and complex process of finding these green zone properties that can qualify and be approved to be operated as a regulated cannabis facility. And specifically what we focus on is those retail dispensary locations. So as a company, I'm going to go into certainly a bunch of our background. Please understand, as usual here, forward-looking statements. I'll talk about the company, some of our financial results in the past that we've reported, and looking towards the future for upcoming first quarter results that will be coming next week. But please review those forward-looking statements. But as I mentioned, for us as a company, we're looking to produce retail dispensary properties for cannabis operators. So we understand the very complex system across this country as states legalize, how to go find these properties. We get those properties secured from a seller, either through a purchase agreement or an option agreement, oftentimes putting those properties under escrow. And then we do the work to find and select the best tenant to put in that location. So our company is looking to acquire these pieces of real estate to build our real estate portfolio and lease these properties to best-in-class cannabis dispensary retail operators. And we are ideally looking for a circumstance where we have a 15-year absolute net lease agreement. In cannabis, this structure works out great because the tenant wants to know they've got long-term security on these regulated locations and that they have control and decision-making authority over the site. So it's the perfect circumstance where our team at Zoned Properties, as a value-add real estate developer, we are finding the sites, we are getting them qualified and positioned to be approved, and then pairing these sites with these long-term cannabis tenants. And in the typical scenario for us, when we put a project together, we have these purchase and acquisition agreements to buy the real estate with contingencies and due diligence periods. So we are only acquiring a site that we have already confirmed an operating tenant under a long-term lease. So when we close on that transaction, we have that rental revenue stream in place. One of our biggest competitive advantages as a company is the technology we have. So we are a technology-driven property investment company. We're not formally a real estate investment trust today, though that is something the company is certainly positioned to consider in the future as we grow our portfolio. We do a little over $2.5 million in annual rental revenue today. And we have, again, these long-term passive absolute net structured deals in place. Today, we have ownership of properties in 3 states, Arizona, Michigan, and Illinois. We just closed on a Chicago transaction, which I'll highlight here in a moment, in January. And we typically are going after 1, 2, or 3 states at a time. That lets us completely use our technology to map that market, create an inventory of possible properties for these licensed cannabis operators to choose from, and then package deals together. One of the most critical components of the cannabis industry related to the real estate is the supply-demand imbalance. So it is very difficult to find these qualified properties that can be used for retail cannabis dispensaries, and they're in very high demand. So all of these new operators that have won licenses in these state markets are looking for real estate, and there are very few that qualify. So when we put together a menu of half a dozen properties in a given state, we have lots of interest from those license winners because they are all required to identify real estate, typically either when they win the license or on a specific deadline following that license win. And that process is the backbone of our direct-to-consumer real estate strategy. So the cannabis industry as a whole, and I'm going to jump around a bit here so you in the audience can see some of these figures, but the brightest North Star for the cannabis industry is consumer demand. Over the past decade, we have gone from just a handful of states that have legalized regulated cannabis zone properties. We've been doing this for 10 years now. So in the early days, it was California, Washington, Arizona that had legalized programs, whereas today in 2024, we have 38 states that have legalized either medical or adult use regulated cannabis with growing consumer demand. And that is why that is so important, is that is what the entire real estate side of this value proposition of this investment opportunity rests upon, that there are growing number of consumers expecting to near a $70 billion industry by the end of this decade. Those consumers spend their dollars at retail dispensary stores. The regulated cannabis industry requires sales to be done at brick and mortar in-person stores. And that is going to support the credit of our tenants that are in our investment properties. So we are always keeping an eye in our underwriting and our research and our diligence process. When we choose projects to invest in, we are keeping an eye on consumer demand at the industry level and at the local level. And our technology gives us significant competitive advantage. We've developed in-house proprietary property technology that lets us efficiently and effectively at state level and national scale map all the parcels within a given area, cross-reference that information against consumer demand and retail habits, demographics and patterns, foot traffic patterns, to find the best sites to pitch these sites to operating cannabis dispensary tenants in the industry and end up with a long-term lease. Example of a transaction we just completed in January of this year in Chicago, Illinois, ended up going into this project for about $1.6 million. And because of the value add real estate development process that Zone Properties has built over the past 10 years, we're able to get great investment returns on these projects. In this instance, a 16.5% effective cap rate over the life of the 15-year lease agreement, with a great best-in-class branded cannabis tenant in that location. We're seeing significant growth, I think, ahead of schedule in the industry as a whole. And I think it's a perfect time in the industry and from an investment perspective for a company like Zoned Properties to be growing its portfolio of investment properties. We've done a very intentional growth strategy over the years to protect our capital structure as a public company. So we have just over 12 million common shares outstanding. We've had many years of positive cash flow from operations, and we're moving the company to increased profitability and income from operations, as well as maintaining good cash positions so that we can approach these investment opportunities. And I know we probably just have a few minutes left here for this update. I'll leave kind of this remainder slide here, and then Anna, we can field some questions. But the other material and important company update that we've done in the first quarter of this year, we just announced the approval from our board of directors of up to $1 million worth of share repurchases, because we see the value in our own equity and believe in the growth and value creation opportunity for ourselves, our company, and our shareholders. So I will pause there, Anna, and turn it back to you for any questions in the time we have remaining.
Wonderful. Thank you, Bryan. Yeah, talk a little bit about some of the recent transactions that have been completed that will add to shareholder value.
Yep. So our two most recent transactions actually over the past year. So we completed a investment acquisition of a retail dispensary in Pleasant Ridge, Michigan in 2023. And then that slide I just showed, we completed an acquisition in Chicago, Illinois. Same thing, dispensary project. Again, these are in kind of the 13 to 18% cap rate range from an investment return perspective. So we're taking our time, adding the right projects at the right pace, and making sure that we raise capital in a way that is protecting of shareholder value. So we raised some bank debt off of other properties that were debt free to raise the capital for those transactions. Additionally, we have a large legacy asset here in Arizona that we just listed for sale on the market for $16 million. That's a debt-free asset currently. So yeah, we're at about one acquisition per year for the past 2 years, and looking to increase that frequency, 2, 3 to 4 acquisitions per year for the upcoming years, so long as we can bring in healthy capital and focus on good capital allocation. Oh, Anna, I'm not hearing you.
Sorry, I have a phantom hanging out in my computer. Talk a little bit about how your company positions itself against future competition.
Yeah, great question. So the biggest factor for kind of competitive edge and defensive moat, especially in real estate and regulated cannabis, is understanding the complexity of those regulations, having a team of experts that have been through transactions. So our team at Zone Properties has been through hundreds of these transactions for our own investment opportunities as well as third-party clients. So our company does have a full national consulting and advisory practice, a full national commercial real estate brokerage, licensed brokerage. So we've done hundreds of these transactions. And then it's really that property technology. So we've been developing our in-house proprietary property technology over the past 5 years. That gives us such a competitive edge for how to find these properties, make sure they qualify, and then position them in the market. So we certainly expect competition. We welcome it. There is a huge amount of need for putting these projects together in the space. But I think it will be several years before we'll see groups acquire the expertise and technology needed to succeed.
Wonderful. Well, thank you so much, Bryan, for this update. We like following along with your journey.
Thanks so much, Anna. Great being here.
All right, everyone, stay with us. We'll be right back with Segan.